a research analyst, Anand Institutional Equities, came out with a note a few days back wherein he turned constructive on IT. So, Sushovan, you kind of preempted a lot of your peers on the street. But I would love to know what was your rationale for turning constructive. Is it purely the valuations, or are you sensing some change in the commentary as well?
Hi, Neeraj. Thank you and good morning. So I hope my voice is audible.
Loud and clear, Sushovan. Thank you.
Perfect. So the reason, basically, as you would be aware, LTIM as well as Infosys, these were the two companies which were anyways quite constructive on because of the execution that at least LTIM has been able to bring in and the growth potential. Infosys has been doing quite well from a Q1 standpoint, and if you look at their commentary, except the fact that the FY26 growth that they had come about, the expectation, the 1 to 3% on an overall basis, that was the only thing that was a blemish. Otherwise, everything was perfectly fine. On the others, on the large cap IT, the reason why we turned constructive, one big thing was the valuations and the fact that everyone is now acknowledging that AI is basically going to be a very important component as far as the growth for IT is concerned, right? I mean, the fact that TCS is acknowledging the problem and whatever they have done as far as the announcement of the layoffs, which will potentially improve their margins and the investments that they're making in AI, all of that will be beneficial for the company. From a valuation standpoint, if you look at TCS, historically, it has the last 5 years or the 10 years, they have always been at 27, 28 times 1 year forward. And now we are looking at TCS, which is almost 22 times or 21 times FY27 is the way we look at it. And if you look at, even for that matter of fact, someone like an Infi, right? Infi is 19 times FY27. And historical valuations have always been around 24 to 25 times 1 year forward. So basically, even from a valuation perspective, the other bit is if we look at whatever is happening in the US, right? If you look at the labor data of theirs or the NFP data of theirs, that has basically disappointed. The unemployment rate is higher than expected. And all of these basically would potentially lead to rate cuts, which will potentially improve discretionary spends benefiting Indian IT. Unfortunately, discretionary spend coming back has been slightly delayed, but what we believe is that with the improvement in interest rate scenario, this is going to come back, and the tax cuts which President Trump has announced, and there have been certain other measures like even R&D spends, right? All of those things would basically be beneficial for Indian IT as such.
Okay. So, but the most important question, I think, from our viewers' perspective, Sushovan, is this a basket strategy where you simply buy the index or you buy a sector fund that has reasonable representation, or you buy a number of these IT companies because valuations across the board are at historical lows? Or would you say that you need to be absolutely selective because there could be a huge divergence in the performance going forward in the near to medium term between the peers here?
So, Alex, thanks for your question. So here I would divide IT into two parts. One is the large cap IT, the other would be the mid cap IT, right? Within the large cap IT, as I said, someone like an LTIM, Infosys, they have been doing well. TCS, Wipro, all of them have come to good value buys now, right? And if I look at mid cap will have to be very, very selective there because I mean, someone which is more BFSI focused, right? Someone like possibly an Emphasis, someone which has got lower valuations, which is going to do well because it has got lesser US exposure, someone like a Mastech with a higher UK exposure, that may potentially benefit, right? And we also like Happiest Minds because that is also a transformation play. So all of these are companies which we like because of their respective, core competencies. It may be valuations, it may be transformation plays, it may be the BFSI sector exposure, because that is something that has been doing secularly well. And if you look at the commentaries of Cognizant, if you look at EPAM or Accenture, BFSI has been doing really well. And that is one of the reasons why we are possibly a little more selective on those companies. Another company which we really like is Intellect Design, but again, we are just evaluating how the numbers pan out. So that is the way I was looking at it, right? So large caps, it will be more value, and we really like those two companies because of the delivery that or the execution that they have been able to bring about. And within the mid and small caps, we'll have to be very selective
Got it.
depending upon the exposure or the valuation.
Got it. Sushovan, absolute pleasure speaking with you as always, and thanks so much for taking the time.